Asian markets closed in negative territory despite hints from the Federal Reserve that it could cut interest rates as early as September. The Nikkei share average ended the session down by 2.5%. The Hang Seng Index declined by 0.23%, while the Shanghai Composite Index was down by 0.22%. Over in the United States, markets ended the session higher yesterday, driven in large part by gains in the semiconductor stocks, as well as the Fed's decision to keep rates unchanged, while at the same time indicating that the door could be open to a rate cut as early as September. The Fed kept its benchmark overnight interest rate in the 5.25 to 5.5 range as it ended its two-day policy-making meeting on Wednesday. The S&P 500 gained 1.58%, the Nasdaq Composite gained 2.64%, and the Dow Jones Industrial Average rose by 0.24%. Locally, markets are trading in positive territory. The rand is trading at around 18.21 against the US dollar, 23.27 to pound sterling, and 19.64 against the euro. The JSE has now extended its losses this hour. The all-share index has fallen by 0.2% at 82,532 points. The industrial 25 index is off 0.1% and financials are flat. Looking at commodities, gold is trading at $2,435 and platinum at $976 an ounce, while the price of Brent crude oil is trading at around $81.34 a barrel. Well, to unpack the markets for us, I'm joined by Simpiwe Letlojane. He's the investment strategist at ABSA Investments. Thanks very much, Simpiwe, for joining us. So the Fed is signaling that rate cuts could start happening as early as September. Are we likely to see more upward momentum on global markets as a result, even though, of course, we see that it's very mixed today when we look at what's happening in Asia?
100%. I think when we're looking at global markets, we have to bear in mind that they've had quite a strong rally thus far. The MSCI World up in double-digit territory, especially if you're looking at US markets. They've been fairly positive this year. And this is also coming from the rallies that they had in the previous year as well, as they recovered quite strongly last year, rebounding. And a lot of the positivity is already being priced into the share prices with, the expectation of easier monetary policy, the expectation of soft landing. So quite a lot of positive news being priced into the markets. And valuations are starting to appear a little bit stretched, especially if you're looking at some of the sectors, such as the infotech sector and the communication services sectors. So not really seeing a lot of further upside. And we can see that even when we're looking at the most recent earnings season, where we're seeing aggregate positive surprises, but markets not reacting as positively to those.
Yeah, so from an economic local perspective, can we expect that the Reserve Bank will be more inclined to cut interest rates then this year, given that the Fed has signaled that they're likely to do the same?
I think, when we see our global counterparts, particularly the US, indicating that we may see interest rate cuts, it definitely would give SAB MPC some room locally. As you know, the interest rate easing globally would essentially, bode very well for the rand and keep the rand anchored at a much lower level, which is important for currency-induced inflation. So giving our MPC locally the room to consider interest rate cuts. And of course, our inflation has been range-bound, but slightly anchored above the 4.5% target where the MPC wants inflation, but it has been progressing quite well towards that target, and we're expecting that it would come in around that range or closer to the 4.5% level, somewhat towards the end of the year.
So the all-share index closed at an all-time high yesterday, shooting through 82,700 points. I mean, much more than that, closer to 83,000 points, in fact. Do you think that now that the Fed has signaled that it's likely to cut interest rates soon, that we're going to see continued upward momentum on the local market? Because, of course, we know that investor returns have been quite poor for the past number of years on the South African market.
Yeah, and South African markets, on a year-to-date basis, they are lagging global markets, but definitely looking a bit more positive thus far than earlier in the year where, you had quite a bit of volatility. And of course, I think, interest rates coming down will definitely be positive for the economy, and as such, positive for consumers who, will get a little bit of reprieve as debt servicing costs come down, and that should bode well for, your local economy sensitive industrials such as your retailers. When we're looking at financials, of course, that benefit should also see credit quality improving for financials and the likes of banks, and we might see them beginning to unwind provisions, but there may actually be a negative impact from a net interest income perspective in a lowering interest rate environment. But further out, we can begin to see credit demand improving. So there is going to potentially be a lag between when we start to see the interest rate cuts and when we start to see aggregate demand overall improving in the local economy. And then lastly, in terms of resources, those are still facing a low commodity price environment, with the exception of gold. But when you're looking at the likes of iron ore, are still affected by factors, in China in terms of the property prices there. But we did see the Chinese officials actually lowering their interest rates as well in order to try and support the economic recovery there.
Yeah. So we saw today ArcelorMittal come out with financial results, their half-year results for the 6 months ended June. Quite dismal numbers, revenue down 3%, a headline loss of 100 cents, which is down 150%, and their net asset value down 42%. The numbers are not looking very good, and of course they've struggled. They've tried to keep their operations going where they had considered collapsing them. Do you think that this company can actually survive?
I do think the company is facing quite a bit of challenges at the moment. Low demand propensities, especially for some of the industries that they supply to. So your construction industries, your automotive industries, your non-durable industries, of course, in this tough macro environment. But any improvement in the macro picture should actually bode well in terms of, seeing demand improving a little bit. They also have had some supply interruptions, especially if you're looking at some of our local operations. And then locally as well, there are some supply side positive tailwinds in terms of improving energy supply, as well as, some improvements in some of the logistical challenges that we've been having. But certainly the overall macro picture really remains the key overhang for the company.
Yeah. Simpiwe, we're going to leave it there because of time constraints, but thank you so much for your time. That was Simpiwe Letlojana. He's an investment strategist at Absa Investments. We're going to go for a quick break, and of course we'll have more news for you thereafter.